Good evening and welcome to TTS Consulting Market Update. Today's date is Sunday, October 26th. I'm going to begin today by going through the S&P 500, the banking index, review research in motion, KBR, show you some Chilean companies worth buying, and then finish up by showing dry ships. So last week we said you could expect a test of the lows, possibly to go as low as 784 on the S&P. It fit the ABC scenario and we did have a drop, but it didn't go as far as most people on the street did expect. So again, we're watching this previous lows for the week ahead with the possibility of going down but another 100 points to around 784. Next up, DJUSBK banking index. What you're seeing right now is a weekly chart of the US banking index. And we have a resistance level of 350 that was broken. You'll see it here, it broke the blue line. So what it did by doing that was create an expanding triangle. So generally what you'll see happen in this scenario, if we can stay above these previous lows of around 226, you're going to have one more quick snap up to around 350, to the same area where that test was broken. So just remember that this usually occurs around 65% of the time when you have a break of that resistance level and it still pushes down for the resistance. Next up, research in motion. Now we gave this to you last week, I think, on a 60 or 30-minute chart. We said that we had a resistance point around 63.56 that we were looking to get short on. This would be good for a decline down to around 42.86. So we said that you might have one rally if there's a support level at 57.43 or 55.86. Both of those were broken within the first hour Monday morning, and it was just down for the rest of the week from there on. So we forecast a decline of $16.15 or 27.37%, and the actual decline came at $18.74 or 31.75%. So the low came in at 40.27, which was the gap down Friday morning, and it rallied from that point on. Next up, KBR. Now, as with research in motion, this stock is a review. We noted that if we could stay above the 1350 lows, you would have a rally up to 1763 minimum target, and if that were to break, next level 1938. So we saw the low come in at 1353, and then a rally as high as 1858. It wasn't able to break through that point, which was confirmation that was correctional activity. But most notably, the range we had given you happened on the last rally for the breakout down. We saw the low came in at 1445. We recommended a buy at 1447, and the minimum sell was 1763, and the high came in at 1761 4 days later. Then it broke out down. We're watching this $10, $8 region for the next support level for the week ahead. Next up, CLDOW. So right now what you're looking at is the Dow Jones Chile Index. So I began today by reviewing several hundred sub-indexes and subsectors, as well as all of the international indexes I could, everything from Slovenia to Kuwait. And the only thing I could find that was different than what you're seeing in the US was the Chilean indexes. So what you're seeing right now is the entire decline on a monthly chart since the peak. Compare that to the S&P 500, and you'll notice how different it looks. Right. So you'll see that Chile pretty much missed out on this huge sell-off that we've seen in the US markets and everywhere else throughout the world. So it really just looks like it's just a regular correction at this point. And keep in mind, though, that this chart you're seeing is priced in the Chilean peso and not the US dollar. The US dollar actually has a little bit larger of a drop into it, but we're looking at it just based on the Chilean peso. What this means is that we're able to buy and take positions in Chilean companies for the weeks or months ahead, because it's assumed that this is looking as though it's just a normal correction for the Chilean markets. And some of the trading ideas, some of the companies trading on the NYSE that are based out of Chile. First up, LFL. So this is an airline company. And what you'll see is similar pattern to the Chilean Dow Jones Chile Index. It's down a bit from around $18 high. But again, we do have an important support level coming in here at around $7.30. And this is one more or less to keep on your radar. Don't necessarily have to take a long on it, but this is, there is some lower lows and lower highs into it, but it's not looking nearly as drastic of a decline as we're seeing in some of the other companies in the US. Next up, ENI. Now this is Enersys, which is a Chilean electric company. So this stock, again, looking as though it's just a normal correction that we've had, regular ABC correction. And this one, there is a bit of a risk-reward scenario that you're not going to find in the other companies. If you look at a quarterly, you can see that we have a technical resistance level just above $20. And if we can go up and take a run and break that, this could easily be a $26, $36 stock. Next up, MAD. Medeco is a very cheap stock. It's only around $5.20. So it deals with metal processing and fabrication. As with LFL, you'll want to keep this one on your radar, on a stock watch list, just to pay attention to it, because it does offer some interesting rewards if you can stay above this low around 38 cents. And it does just look like a normal correction. If we can go up and take out this $10 mark, we should be able to push up for a new high back above 16. Next up, EOC. Now, Endesa is a Chilean electric company similar to ENI. Now, what you'll notice is that just about 5 weeks ago, it hit a 52-week high, and it's pulled back quite aggressively from that point. So with this stock, you can price in an additional low coming up for the next week at around 26.49. And if it can hold above that, then we're going to have a 50 to 61.8% retracement of the move down from this $56 high. And finally, DRYS, dry ships. So the chart you're looking at right now is a weekly chart of dry ships. Now, DRYS owns and operates dry bulk carriers worldwide. So its fleet primarily carries commodities, including coal, iron ore, grains, fertilizers, and steel products. So in the most recent high came during mid-May at 116.43. So as such, it's currently trading down 85.5% from this high. So people talk about the credit crunch and economic slowdown. This company has been hurt a lot by global economic slowdown, and it's been hurt a lot also by the decrease in the price of commodities. So that's why you've seen the stock peak at 130 and drop to around $17 today. So what you're going to see is a 1045 to 1274 support level, and if it can hold in that area, you've got a gap at around $31 you can close. So you're looking at around 200% return in this stock, even if it is a correction. It doesn't really matter. That's the gains that you're looking at this point, and it's a realistic target around just above $30 because that's where it was at the beginning of this month at October. Now the first resistance based on ratio comes in at 35.84, and if that can break, we're looking at testing the next major technical resistance at around $51. So I want to thank everyone who had a chance to check out the website this week, and just remember that it's really the techniques that you use to trade that's the deciding factor whether you get to keep your money, grow your equity, or just give it away to someone else. Thanks.